everyone, and welcome back. In our previous lesson, we explored the debtors journal and debtors allowances journal, how we record transactions when our customers buy from us on credit or return goods. Today, we're turning that story around. Instead of focusing on the people who owe us, we're going to look at the people we owe, our suppliers. We'll learn how to record these transactions in two new journals, the Creditors Journal, often shortened to CJ, and the Creditors Allowances Journal, or CAJ. By the end of this lesson, you'll know what types of transactions go into each journal, which source documents to use, what each column means, and how to record the information from the source document in the applicable journal. Ready? Let's get started. In the debtors journal, we were the seller, providing goods to customers on credit. But in the creditors journal, we are the supplier, buying goods from suppliers on credit. Think of the Sunny High School tuck shop. The tuck shop buys its inventory, chips, chocolates, cold drinks, and lollipops from suppliers like Skozana wholesalers. Sometimes the tuck shop pays immediately. That's a cash transaction, and we'd record that in the cash payments journal. But when the tuck shop says, "We'll pay you later," that becomes a credit purchase, and it's recorded in our creditors journal. Later, if the tuck shop sends some of the inventory back, maybe it was expired, damaged, or not what was ordered, that's recorded in the creditors allowances journal. So in short, the creditors journal is what we buy on credit from our suppliers. The creditors allowances journal is what we return or get credit for from our suppliers. Remember how we said the tuck shop uses the perpetual inventory system. That means every time we buy or return stock, we immediately update the inventory account, so we always know exactly how much stock we have and what it's worth. When we buy on credit, two things happen in our books. Our inventory increases because we now have more stock, and we owe the supplier, so creditors control increases. In accounting terms, that's debit inventory and creditors control. When we return goods to the supplier, the opposite happens. Inventory decreases and the amount we owe to the suppliers goes down. So the entry becomes debit creditors control and credit inventory. Understanding these entries will make it much easier to record it in the journals correctly. Every journal we use in accounting has its own purpose. The same is true for the creditors journal. As we already said, the creditors journal is where we record all inventory purchased on credit, as well as assets, for example a laptop, or even our stationery and cleaning materials. The source document for the creditors journal is an original invoice, which we will receive from the supplier when we purchase the inventory, the asset, the stationery, or the cleaning materials. For example, if Skozana wholesalers sell us inventory on credit, they'll give us an invoice showing what we bought, how much it costs, the value-added tax, and the total amount we owe. We'll record that in our creditors journal using the details from the invoice. Let's look at the layout of the creditor's journal and what each column means. Your creditor's journal usually has these columns: a date column, when the transaction happened; details, the name of the supplier, such as Skozana Wholesalers; a document number, the invoice number from the supplier; a creditor's control column, where we will record the total amount we owe the supplier, so the VAT inclusive amount; an inventory column, where we will, depending on whether our business is a registered VAT vendor or not, either record the amount excluding of VAT or the full amount. And if we are a registered VAT vendor, we will have a VAT input account where we will record the 15% of VAT that we can claim back from the South African Revenue Services. And then we will have a sundries column with an amount, a folio number, and the details of the transaction that took place. Okay, so the first thing that we need to record is our document number. Let's go find it on our invoice. We start with the heading, original invoice, then the name of our supplier, Skozana Wholesalers. On the left-hand side, we have their address and their VAT registration number. And then on the right-hand side, first line, it says invoice number. Now that invoice number is what we're going to use for our first column, the document number column. So our number is 1492. Okay, so in our first column, we record 1492, which is our document number. That now means that when we've recorded this transaction, we will be able to trace it back to the original source document if there's any kind of dispute about this transaction. The next column that we will have to record is our day column. For that, we will need the date. Directly under the invoice number, you'll see the date, 6 August 2025. That means that we will now take the day 6 and record it in our day column. So, in our day column, we write 6. You will see that we don't write the month there because the month is already included in the title of this journal. It says Creditors Journal, August 2025. Therefore, we only have a day column to indicate the day on which the transaction took place. Next, we need to record our details column. And for that, we will need our supplier's name. On our invoice, the supplier's name is indicated as Skozana Wholesalers. So, in our details column, we will record the name of our supplier as Skozana Wholesalers. Now, next thing we need to record is the amount of the transaction in our creditors control column and in our inventory column. But our invoice had value-added tax on it. Our creditors journal does not have a VAT input column. Why? Because Sunny High School Tuck Shop is not a registered VAT vendor. When you do a question, always be on the lookout for whether a business is a registered VAT vendor or not. If a business is not a registered VAT vendor, then you will always work with the VAT inclusive amount and you won't record VAT separately. So for our high school, we will have to go back to our invoice now and search for the full amount, including value-added tax, to record. Okay, so on the invoice, we will see a quantity item, unit price, and the line item total. We purchased chips and chocolate bars, Coke and lollipops. We have a subtotal of 241 Rand, VAT of 36 Rand and 15 cents, and then we have the total amount due inclusive of VAT of R277.15. So as we said, because Sunny High School Tuck Shop is not a registered VAT vendor, we will need to record the total amount due inclusive of VAT in both our creditors control column and our inventory column. So let's go do that. Okay, so in our creditors control column, R277.15, and exactly the same in our inventory column. We don't have anything to record in our sundry accounts, so we are done. You have now successfully recorded the credit purchase of inventory from the original invoice we received from the supplier in your creditors journal. The creditors allowances journal records any returns, discounts or price adjustments that reduce what we owe to our suppliers. Typical reasons for entries in the creditors allowances journal include goods damaged when they arrived, wrong items delivered, expired or incorrect stock, or allowances for packaging or delivery errors. These transactions will reduce the inventory that we own as well as the amount we owe to our suppliers. Let's look at the columns for the creditors allowances journal. We will have the date, where we will record the date on the credit note. Details, where we will record the supplier name. Document number, where the credit note number from the supplier will be recorded. A creditor's control account, where the total refund that we received will be recorded. An inventory column, where the value of the inventory returned or allowance given will be recorded. And if we are a registered VAT vendor, we will have a VAT input column. We will also have sundry accounts with an amount, folio number and details column. So if you look at the creditors allowances journal, it has the same layout and column headings as our creditors journal. When we return inventory, we will issue a debit note, which will accompany the inventory to the supplier. The debit note will provide the supplier with details such as the quantity of the inventory returned and the reason why we are returning it. Once the supplier accepts the returned inventory, they will issue a credit note indicating the refund we will receive for the inventory. The source document for the creditors allowances journal is the original credit note that we receive from the supplier. The first column in our creditors allowances journal that we need to complete is the document number, and for that we will need our credit note number. Let's go look for it. Okay, so if we start reading the source document, it says credit note. It was issued by Skozana Wholesalers, which is our supplier. On the left hand side we have their address and their VAT registration number, and then on the right hand side we see credit note number 764, and that's what we need for our first column. So let's go complete it. In our document number we will write down 764. The next thing we'll need is the date, so we can complete our day column. Directly under the credit note number we see the date 6 August 2025, so we will use that to complete our day column. Let's go do that. Okay, so exactly the same way as what we did with our creditors journal, we will now write 6 in the day column, since the name of the month is already in the title of the journal, Creditors Allowances Journal, August 2025. Now, next thing we'll need is our supplier's name for our details column. And on our source document, our supplier's name is indicated as Skozana Wholesalers. Now, in our details column, we will write Skozana Wholesalers. The last thing we now need to do is to record the amount of the transaction in our Creditors Control Account column and our Inventory column. And for that, we will once again use the total amount inclusive of VAT, since it's stated that Sunny High School Tuck Shop is not a registered VAT vendor. On our credit note, we see the quantity, the description, and the amount. We returned some chocolate bars for 75 Rand. The VAT on that was 11 Rand 25 cents, and the total amount our account will be credited with is 86 Rand 25 cents. So we will use that 86 Rand and 25 cents to record the transaction in our Creditors Allowances Journal. So now we write 86 Rand 25 cents in our Creditors Control column and in our Inventory column. And that's that. We have now successfully recorded a credit note with a return of inventory in our Creditors Allowances Journal. Well done! Let's have a look at how we will post these totals to the ledger accounts. At the end of the month, we add up all the transactions in each journal and then post the totals to the general ledger. For the Creditors Journal, we will debit inventory with the sum total of that column, and we will credit our Creditors Control account with the sum total. For the Creditors Allowances Journal, we will debit Creditors Control with the sum total, and we will credit our inventory with the sum total. Now, if you think back to when we did the accounting equation and the accounting equation rules, we said that assets increase on the debit side and decrease on the credit side. So, if we purchase inventory on credit, our inventory increased. That is why we will debit inventory with a sum total from the Creditors Journal. And assets decrease on the credit side. That is why we will credit inventory with the total of the inventory column from our Creditors Allowances Journal. Liabilities, on the other hand, decreases on the debit side and increases on the credit side. And that is why we will credit our Creditors Control with the sum total from the Creditors Control column out of our Creditors Journal and debit Creditors Control with the total of the Creditors Allowances Journal. The Creditors Journal increases the amount that we owe to our supplier, so it increases our liabilities on the credit side, and our Creditors Allowances Journal decrease what we owe, so it decreases the liability and is therefore credited. These totals are then used to update the Creditors Control account and each supplier's individual creditor's ledger account. It's always a good idea to check that the Creditors Control balance matches the total of the list of all individual supplier accounts. That forms part of our internal control systems. Let's quickly talk about some of the most common mistakes students make with the Creditors Journal and the Creditors Allowances Journal entries, and how you can avoid them. Number 1, using the selling price instead of the cost price. Remember, the Creditors Journal records what we pay the supplier. That's the cost price, not the price we'll sell the goods for later. Forgetting VAT. Now, VAT is something that you only need to record if you and your supplier are registered VAT vendors. But when both are registered VAT vendors, always calculate 15% on the exclusive amount. If you add VAT on the total, your figures will be inflated. Number 3, copying the wrong document number. Check carefully. Suppliers' invoices and credit notes each have their own numbers. Use the correct one every time, since you will use these to trace the transaction back from the journal to the source document in the event of a dispute. Number 4, putting the total in the wrong column. The total always goes to the creditors control column. The VAT exclusive amount goes to inventory, and the value added tax is in a column of its own, unless you are not a registered VAT vendor. Then you will use the total amount in both columns like we did today. Number 5, not balancing at month end. If your creditors control total does not match the list of suppliers' accounts, then you need to check your document numbers and the totals to ensure that every transaction was recorded correctly. Why this matters: preventing mistakes, overstocking, or running out of items. Accurate CJ and CAJ records keep the tuck shop's books reliable and its relationships with the suppliers strong. Think of it this way: if the tuck shop doesn't know exactly what it owes, it could accidentally pay the same supplier twice or forget to pay at all. Both mistakes can hurt the business's reputation and cash flow. Good record keeping protects against these risks. It also makes it easy to answer questions such as: how much do we owe each supplier? Which invoices are still unpaid? And have we claimed all the value-added tax we're entitled to? By recording each credit purchase and return properly, we keep our financial picture clear, and that helps us make smarter decisions for the future. Let's quickly recap what we've covered in today's lesson on the Creditors Journal and Creditors Allowances Journal. We flip perspectives from being the seller in the Debtors Journal to being the buyer in the Creditors Journal. The CJ records goods and services bought on credit from suppliers. The CAJ records returns or allowances that reduce what we owe. The source documents for the CJ is the original tax invoice or supplier's invoice that we receive. And for the CAJ, it is the original credit note we receive, as well as the debit note that we issued. We looked at the column headings. We briefly looked at the perpetual inventory system and how we post the totals from the journals to our ledger accounts. If you can explain what each journal is for, identify the correct source document, and record it confidently, you have mastered this topic. Let's end with a thought. Every time the tuck shop buys on credit, it makes a promise to pay later. Good record keeping is how that promise is honored. The better you understand your creditors journal and creditors allowances journal, the more control you have over your business's debt, inventory, and cash flow. In real life, big companies use the same process. The only difference is that they use accounting software instead of paper journals. But the logic never changes. So when you're running a tuck shop, managing a business someday, or just learning how money moves, remember this: every purchase tells a story, and every journal keeps that story true. Stay curious, keep learning, and keep balancing those books.